Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, November the 6th. My name's Eric Wilkinson, and yes, you may very well recognize me as the Wolfman from mainstream media. I'm here to talk about the markets. Not only that, I'm here to talk about the economic data and how that should affect the markets. Also, I'm here to talk about options trading and how to implement those options into your portfolio. It's not about just knowing how to build a strategy, you guys. It's more important to know all of the levers and pulleys that go on in and around these different option strategies in order to implement them into your portfolio and therefore increasing your probabilities of success, okay? Anyway, without further ado, let's get on with the economic data across the pond. We got German factory orders coming in at 1.3%, expected to be 0.1%. They did revise last month's number up by 0.2% as well. That's a good thing because we have been seeing some pretty darn weak economic data across the pond, and this is a bit of a silver lining. Even though it's not one of the most important economic data points to look at, it is something very pertinent to keep an eye on if we are talking about this global get together with our Fed and the European region. All right, so that's a good thing. Also, they got a bunch of PMI numbers, Purchasing Managers Index from the service sector. It's not their most important one. The one we really look at over there is their flash PMIs, but something to note anyway, all of those came in above 50, and if we remember, PMI numbers, anything above 50 is expansion in the economy. So that's good. Also, retail sales coming in line with expectations across the pond. Earlier this morning, we had Evans, who is a FOMC member, talking. I haven't heard a whole lot out of that, so it must not have been too much of a thing to note. Then we got non-farm productivity, which is probably the thing that everybody's going to be talking about, especially those doom and gloomers, because it came in at negative 0.3%, one of the lowest readings we've seen since last December, I think, or since December. And then we also got unit labor costs, which is kind of getting brushed under the rug right now, which is good because we're seeing those prices go higher, which is wage inflation. That means that these people that are working can actually spend a little bit more money. We talk about velocity of money. This is one of those ways to create that velocity money, because if somebody's got a couple extra bucks to spend in their pocket, everybody is going to spend that money differently, okay? So that should help the economy as well. And then we've got, Williams is probably done speaking now, but he was speaking as well. I thought it was going to be a little bit closer to this time that I shot this. And then finally, we've got weakness in crude oil. Actually, it's unchanged. Now it's weak, but that's because we're seeing a build in crude oil by about 6 million barrels over what was expected. And it came in at 7.9 million barrels, expected to be 1.9 million barrels. So we've talked about this yesterday. I think I said that I did not expect to be able to see crude oil be able to sustain much more of a rally here, because we've got a couple of Fibonacci's lining up with the $58 and $59 a barrel. I think that gets a little bit frothy, a little bit overdone to the upside, especially with this global slowdown that we're really seeing. It's not all about gasoline with its crude oil. It also has to do with the manufacturing sector, where it goes into the plastics, and plastics just in about everything that somebody is going to manufacture, probably polypropylene. You know, you've heard of PVC. That is part of those products as well. Weakness manufacturing should cause a lack of demand in crude oil. Also, if the economies are slowing down, people aren't going to be going on vacation and driving those cars and spending money on gasoline. So I think that we're still in that camp where we're going to be staying between $55 a barrel and $50 a barrel. Fill in this little volume node right here. I've talked about that time and time again. The magnet right there at $50 a barrel or $55 a barrel should cause this market to come back down with that much of a build, and with the weakness we've been seeing in most of the economic data across the pond anyway. All right, gold starting to make a move higher. You know, I've talked about this as well. 1,500 is kind of the over-under right here, as the bulls and bears are going to fight over it. That's $1,500 a troy ounce. We're just slightly below that. You know, yes, normally when we see it get above this value area high right here, we start seeing price not really being accepted as much down there or up there, above and below those value area highs. and we've got the point of control way down here at almost 1300, 1287. I don't think we're coming down that far, you guys. The economy would have to really be booming, or we would have to see a real strong dollar. We're not really seeing the strong dollar camp because, we're doing this non-quantitative easing that the Fed is saying. They're really doing a bit of quantitative easing, but they're not air quoting it like I am. And 1,500 troy ounce, I think, is where we are going to see the time and volume shift to, and where price is going to be accepted up at these levels. So some more time and volume banging back and around above and below that number. We should see that shift in the paradigm to 1,500. I don't think that we're going to see all-time highs right now, but I do think that it's going to find a comfort zone right here in and around where we're currently trading. And then we move over to the bonds. Bonds yesterday had a big sell-off. Today we're getting a bit of a rebound. We're off of the highs, which was almost up a point on the day. I thought today we might go down there and test this 157 mark. It looks like that's out of the realm right now with the market momentum. We are seeing some currently, lower highs and lower lows. We haven't really printed that lower low, which I thought might happen today. I still think we're going to see a bit of a rebound here, as I think that the Fed is going to continue to be on a dovish mandate where they're going to be looking at global economies and discerning what our Fed policy is based on a coordinated effort on interest rates. All right. So I think that we're going to see some move higher in the bonds. We have gotten the re-inversion where we aren't really looking at a recession here in the United States, and that would kind of lead one to believe that they're going to hold off on those interest rate cuts. But I think that the more and more we see economic data out of Europe is going to be really what discerns that. I think the bonds are probably a little overdone to this point, and maybe should even be played to the upside. May have just given myself a trade idea. It might be overdone. All right, we've got the Dow Jones pretty much unchanged, up a couple points on the day. Yesterday we did create a new all-time high, and if you look at that chart set up right there, that doesn't look really promising, especially if we finished to the lows or even came down and touched this 27,377 area, which would be another 100 points lower. It doesn't feel like that's going to happen today, but anything really settling below yesterday's low could really make that chart look like we've created a topping pattern there, and wanting to roll back maybe down into this value area. We are extended above the value area high, and I've talked about this before. I do see the markets kind of wanting to create something like that, and maybe come back down a little bit, but continue bouncing in and around, maybe every once in a while creating a new all-time high, but not really sustaining a direct move higher. I don't think that necessarily is what we are going to see in equities. I don't think it's going to be a direct paradigm. I don't think we could draw necessarily something like that and believe that was going to necessarily be able to be sustainable. It may very well, but I believe this line is probably going to be tested quite often and maybe even break through it every once in a while. All right. As people, when we get above, like I said, the value area high, we are seeing some good volume up there where people feel like they're missing the boat, and maybe even some people covering the way the market's kind of topping out there. This is that pattern that I've talked about that could lead one to believe we'd at least come down and test that line there, which would kind of coincide with the value area high, and see if those bulls can defend that area. And then we move over to the E-mini S&Ps. They are pretty much unchanged on the day. As this is what I was talking about with that mixed bag. It's kind of like they're all toggling back and forth between red and in the green. And right now we're in the red for the E-mini S&Ps. Again, This pattern right here, we're going to have to keep an eye on. Again, we might easily come down and test these value area highs as finding support. You know, we can see that it is lining up nicely with these tops here. If I could draw a nice line, which I can't. As a matter of fact, you know what I could probably try to do is do a line like this and draw it like that, and you can see it pretty much lines up with our value area high, and that acted as resistance before. It should act as support now, despite the fact that we don't have a Fibonacci line in and around that area. And then let's look at the daily chart of the mini S&Ps. Pretty flat on inventory overnight. No real attempt to flush anybody out. The economic data, like I said, came out, and we got that non-farm productivity. That was really the catalyst for the weakness. But I think people are going to be looking at that throughout the day and see, you know, the economy here in the United States really isn't that terrible, but and kind of hold on to our current levels, if you will, and not really break out too much, because unless there was something really crazy coming out about a tweet or something like that. All right, let's talk about the trades that I've done, and CVS is one of those trades that I played yesterday. I did not end up doing Devon Energy. I just didn't really have a good feel on that one. But CVS was looking pretty good. Also, there were some rumblings about Walgreens maybe going private. All of those things usually have a tendency to lift everything. Aetna is involved with CVS, so they're kind of a health care company, really, to be honest. They have those ReadyMed or whatever they call those little places where you can go into a CVS and get tested for, say, strep throat, which is currently in my house, by the way. So keep your eyes out for that happening with your children. Anyway, so I went into the November and sold these 64 puts in there. You know, they're expiring relatively soon on Friday because they're the weeklies, and sold those for 48 cents. I bought them back for 5 cents right on the open. Probably get those, I think, right after I bought those for a nickel. I saw a 3-cent offer come in. Somebody was angry they didn't get their 5 cents from me and bettered that market almost immediately. So a nice trade there. One other thing I wanted to talk about, I think, was McDonald's. McDonald's moving higher today. I was actually expecting us to really test this 195 area. Now that the day has drug on a little bit further, you can see it's showing a little bit of weakness. I would not really want it to settle where it is right now, because that would make the chart pattern not look so great or near the lows. So I'm going to have to keep an eye on that. I haven't traded anything with it, but I was hoping to pull this trade up, or this chart up, and see it above 195 there, because we were having a nice move happening and thinking we'd go back to test this volume node here eventually, or relatively soon, maybe even the 200-day moving average. They're talking about, you know, doing the plant-based meats and all of that stuff, which has really caused this move a little bit higher. And, you know, as value, I'm going to hold on to this trade. I'm still short those 200 puts in there. And if it gets put to me, then it gets put to me. At this point, I will just be mechanical. Follow me on that. You know, if you have trades on in your portfolio where you have long stock and they aren't working out very well, then I will show you how we lower our cost basis on that, stay in this trade, and turn this into a profitable one relatively soon. All right, that's about all I got for you guys. Check out tomorrow's webinar. It is on this bullish bearish bias type thing. We'll come up with a bias, and then we'll find the right strategy for the environment in and around that underlying. All right, so go to Pro Trader Strategies, sign up for that. Also follow us on Facebook at ProTraderStrategies.com. That's all I got. If you can't take that, take it easy.